Well, let's get across the market open now. Zach Riaz joining us from Banyan Tree. Zach, welcome. Now, obviously, front and centre at the moment is that ongoing conflict between Israel and Iran. Indications perhaps from Iran, they are seeking a way out, some sort of ceasefire here, and as a result, we did see oil prices come off. What are you watching and in terms of that market reaction?
Yeah, good morning, Andrew. Look, obviously we got across the news over the weekend and started to get our heads around it. First and foremost, I think I will say, yeah, it's interesting. They're looking for an off-ramp. I didn't think the off-ramp will come so soon, but that's what the news agencies, credible news agencies are suggesting. I don't think Israel is going to look for an off-ramp that soon, but hopefully, for the sake of stability, that happens. But just in sort of taking a step back, these geopolitical events, I mean, we were talking about it off air, seem to be occurring quite often recently. But if you go back in history, geopolitical events tend to have a mixed impact on how long they impact markets and price movements. But more specifically, I looked at some data which showed more specifically around the Middle East issues and involving Iran. And if you go back to all the flares up, there's probably 5 or 6 of them, Andrew, when there's been some sort of involvement with Iran, Middle East tensions, and that's what you're seeing. And this is actually the price movement of crude contracts. So we'll talk about oil, because I'll tell you why oil is important. Right now, oil is likely to be driving long-term bond yields. You saw overnight equities rallied, but bond yields were still up, and they're taking their cues from obviously the oil markets. And this shows that, long story short, that oil markets, after the initial reaction to these Middle East tensions, tend to pretty much dissipate or fade away. So I think the equity markets have already started to fade away some of these concerns in the Middle East. Let's hope that it is true. But yeah, we think this is eventually going to sort of settle down, and overnight news of Iran looking for an off-ramp is a good first sign. But as historical data suggests, which is what you're seeing on your screen, oil prices are likely to lose some of the premium that they're experiencing in the valuation right now. And so we'd be very cautious sort of chasing oil equities just for that geopolitical premium, because data suggests it's going to get faded away fairly quickly.
Do you think this is market complacency? Given like we're at those record highs, the market prepared to shrug this off at this point, it would seem?
I would say the initial reaction, and because of the data that I just showed, the initial reaction was more around there was a lot of complacency in the market. And I know that subsequently the markets have rallied. But look, there's an element to show that there is market complacency, or some can argue there is market complacency. But look, let me show the next chart, if you can pull that up. And I think this may help answer the question. If you think there's market complacency coming from institutional clients, well, this shows you the flows as of June by Bank of America. And it shows that institutionals aren't really participating in this rally. Bottom chart, private clients, so call that your retail clients, have been pretty much, again, that buy the dip rally. So there are elements of, there is an argument that you can make that buy the dip retail clients are showing an element of complacency. But look, things are still holding up. You saw overnight, I think the latest macro data that came out of the US, current forward orders were a little bit below expectation, but forward orders for the next 6 months were actually looking pretty positive. So overall, I think this chart is very important, because if the retail have got this buy the dip strategy right, there is a lot of demand or catch up to be played by institutional. So look, some corners there may be argument that there's complacency, but there are some corners that are definitely nervous that maybe they have missed this rally and that may have to chase it.
Beware. All right, let's come back home then, Zach, and what we're seeing. Now, significant corporate news yesterday. This was in the midst of this oil price rally, and lo and behold, we've got this bid for Santos. Now, what's the chances it's going to get through, given strategically Santos is important as far as Australia's energy security is concerned, and therefore it's got to go before the Foreign Investment Review Board?
Absolutely. I mean, that's the concern. Santos has been our key pick within the sector for a long time. In fact, we own it in our global strategy as well, global equity strategy. So that's the conviction we have. It's always been the subject of numerous takeover bids. That's happened now. And look, it's very interesting. Santos has caught the perfect storm. You've got rising oil price on the back of geopolitical tensions, and then obviously you've got a very healthy premium to last traded price on Friday of 28%. The key concern that we have is, and I think investors did yesterday fade some of the rally in Santos share price, is that the Foreign Investment Review Board will look at this carefully. We've talked about the East Coast gas energy prices issue. It's been a key concern. It'll be very interesting to see how they handle it. All I'll suggest is investors look at the APA bid by CKI many years ago, which the Treasurer knocked back. In fact, we were in Hong Kong a couple of years ago. I was doing meetings there and I met with CKI and I said, would you ever go back on APA? Obviously, they can't give you too much guidance, but what they said to us was that the regulatory and approvals environment has become a lot more difficult and hostile. And so it will be very interesting to see what the Foreign Investment Board Review Board does with this. But I think the probability of this being knocked back is more higher than what some people are expecting. But I would suggest that yesterday's fade in Santos rally suggests that investors have got this as part of their thinking.
All right. Just before you go, still in the energy complex, those uranium miners, yesterday, they were huge moves. How are you looking at that subsector at the moment?
Yeah, look, we did a very thorough report in uranium 2018, two-part report, and sometimes luck is on your side. We call the absolute bottom there. We think uranium has a place to play in investor portfolios. The companies in Australia are slightly more speculative because of the long datedness of when the production comes into play. Deep yellow is one of the ones that we prefer. But putting that aside, I think there's been some really good news out of international corners around uranium and the support for uranium. So look, it's a speculative and highly volatile sector. We think investors with the risk appetite should look to find the best in the sector opportunity, but it's going to remain volatile, and how we would certainly play it is when there's a bit of a rally in the market, we will be taking some off the table. But I think some of the news that's driving the recent share price has definitely got to do with some positive, I think, policy movements in the US more specifically.